any romantic experience is always memorable, isn't it? So what about today romancing with our financial statement? Let us romance with our profit and loss and balance sheet and make it memorable experience for all of us. So before we romance with our profit and loss and balance sheet, let us look into the aspect of why a business comes into existence in the first place. When any business wants to start its operation by the promoter, he thinks that he wants to deliver value to the people around him. So that's the reason he starts a business. And of course, being a promoter of the business, he expects to understand whether it is being appreciated or no. If it is being appreciated, then he will see profits. If it is not being appreciated that much, he will see less profit or loss. Right? So that is one way, by looking into the profit and loss statement, that the promoter can understand how much appreciation he is getting from the public. And if the appreciation is a lot, then he decides, okay, I'm getting a lot of appreciation. Let me reinvest this appreciation or profits to build more businesses around it and take it global. More people will start appreciating. And with more people starting appreciation, of course, it will reflect into its profits. So, once we have said that profits is what the businesses work towards, having said that, is profit enough? Is it the only aspect? There can be cases that the business is saying, hey, look, in my profit and loss statement, I am earning a lot of appreciation from the public. Hey, look, come and invest into my company. Well, is it the true appreciation? The true appreciation should reflect into its cash profits. It should show into its bank balance as cash profit. What is the use of appreciation into a profit and loss statement without it being reflected into its bank balance, right? It has to appreciate the employees as well. It has to appreciate the suppliers for giving it raw materials. So once it sees the real appreciation as cash into its bank balance, then only it can pay its employees and all the suppliers. So the two aspects is required for any company to sustain itself. First, it has to generate profits, and second, it has to maintain its cash flows. So we have understood now the reasons why the company comes into existence and what are the two key ingredients that a good company should have. So now let us look into why profit and loss statement. When the promoter starts a business, he wants to understand, right, whether the company is going to make profits or no. He wouldn't know from the start of the business. So then he says, okay, let me appoint this smart guy called as the accountant. And he tells the accountant, you need to watch two aspects. One aspect is the inflow of cash coming into the company, and the other aspect, all the transactions which are leading to outflow of cash from the company. And he tells him, at the end of the month or the end of the quarter or end of the year, you have to look into all these transactions related to the inflow of cash as well as the outflow of cash, and then summarize them and show it to me, who is the promoter. Then he says, okay, fine. And he waits till the 30th of the month or till the end of the quarter. And he says, okay, now is the time. Let me see all the transactions which have caused the inflow of cash and all the transactions which have led to the outflow of cash. So, what causes an inflow of cash into the company? Let us understand. The inflow of cash can be caused by selling a product into the market. Then that will reflect as revenue. An inflow of cash can also be caused by certain investment that the company might make. So this also causes revenue impact. So now he wonders, okay, fine. So where should I represent it? Should I represent it in the profit and loss statement, or should I represent it in the balance sheet? He's like confused. Then he says, okay, let me study accounting, and he reads the accounting book, and finally he gets the answer saying that, okay, so whatever comes as part of revenue is what the company has earned. So this earning he did not return back to the same people who has caused it to earn in the first place. So what it has earned, it has become the company's own money or capital. Of course, when you say own money, the ownership is represented by the shareholders as well as the promoters. Then he says, okay, because it is caused as a result of selling a product or as a result of an investment, it is its own money. So let me show it into the profit and loss statement as part of the income section. Great going. And now he sees another transaction which is causing an inflow of cash. And he wonders, scratches his head and says, oh, what is this second component which is causing an inflow of cash? Then he says, okay, the banks have deposited money. Oh, okay, these are the loans which we have requested from the bank that has caused the inflow of cash. And now he's all wondering, okay, this inflow of cash is not a result of an earning. It's not a result of selling a product. It's not its own money. It has to return back this money at some point of time. And because it has to return back this money at some point of time, and now that he is knowledgeable of accounting, he says, okay, this has to be represented into the liability section of the balance sheet. Now that you have understood the inflow of cash, let us see into the outflow of cash. The accountant now sees the outflow of cash. Okay, too many outflow of cash. Where all this has to be represented. When he sees that the cash outflow is due to an expense, like for buying a raw material, then he starts to investigate and find out, okay, this expense is caused within this same year before I'm preparing the financial statement. So hence, because I have to recover this expense, I need to show it as part of the profit and loss statement within the expense section. Why expense section? It could have been shown in the asset section as well. Well, an asset also causes outflow of cash, isn't it? Because to generate assets, the company needs to spend. The company needs to spend its capital from its own bank accounts. So hence, assets also causes outflow of cash. But because this expense is a result of buying raw materials, and it has to be considered in the same year as the accounting period, hence it is considered as part of the profit and loss expense section. Now what about the expenses done towards purchasing plants, equipment? Where should this be considered? This should be considered in the profit and loss or the balance sheet. Now the accountant thinks, okay, I want to recover all these expenses in the same year. Then he goes gung-ho and represents in the expense sheet of the profit and loss to recover all the expenses towards fixed assets. And then he says, no, if I show this entire expense in the profit and loss statement in the same year, he's going to show loss. But my assets, which is plants and equipment, are going to serve me for a long period of time. So let me divide the cost of this asset over multiple years. The expense which I want to recover in this year, I will show it in the profit and loss within the expense section as part of a depreciation or amortization. And the expense which I want to recover in subsequent years as part of the future income, I would put it in the warehouse and say, keep it in my warehouse as part of long-term assets, and I will recover this cost in the future. So hence, that portion of the expense which is not recovered in that specific year, it is shown as part of the assets in the balance sheet. Okay, now that we have understood all these aspects, we have seen what causes the inflow of cash and what causes the outflow of cash. Now we have understood this, let us see, this is all cash transactions. What if there is a situation wherein the company might be expected to pay back cash in the future? It has taken raw materials from the suppliers and said to its suppliers, don't worry, I'm going to pay this cash in the next month or the next quarter. So it needs to remember. So where it will remember this? So the warehouse, as you remember, that is a balance sheet. So the warehouse of where the company needs to spend money, it has to be represented into a balance sheet. And since This is what the company owes to the suppliers. It has to be represented within the liability section of the balance sheet, which is the current liabilities. So these are the short-term liabilities which the company is expected to pay out within the next subsequent 12 months. Now, of course, there is another thing. Like the way the company owes, it might also expect money from its customers or retailers for which it has given on credit. So where this has to be represented. These are assets, of course, this will cause money to come in. So this will be represented as part of the balance sheet, as part of asset, because it is going to expect money in the future. It will be part of the current assets, as part of the receivables, trade receivables. So now that we have understood all the transactions which lead to the inflow and outflow of money from the bank of the company, and how to represent it into our income statement as well as our balance sheet. So we are now become the romantic partners of the financial statement. And we will remember this forever. What causes inflow? What causes outflow? Inflow is caused by liabilities and revenue, and outflow is caused by assets and expenses. And there is other aspect called as the trade payables and trade receivables, which are represented in the respective section of the balance sheet. So now that we have understood all these aspects, let us see into a subsequent video which I'm going to demonstrate to you how to prepare our own financial statement, which is a profit and loss statement as well as our balance sheet. The profit and loss statement is going to represent our income and expenses, and the balance sheet is going to represent our own assets and liabilities. So let us think for a while that we are the business itself, and we have to prepare this financial statement. It is easy as long as you romance. So please subscribe to see my next romance, which is preparing the own balance sheet. See you.